Thank you. Morning, ladies and gentlemen. We've got a full room here today, plus we got a webinar going and a teleconference, I believe. So please bear with me if we have any questions or so to pass the microphone around so that the guys on the electronic can also hear. So welcome to our integrated trading clearing conceptual training. Not so much training, but any specific questions that you would like to get answered on the, starting off right now that we can put down, and then we'll see if the slides cover those. Otherwise, we can come back to them at the end, just so you can manage your expectations a little bit better as well to see, what you'd like to get out. If there's anyone, we'll start with anyone in the room. Otherwise, just happy to listen. It's also good. Okay, so we'll do it at the end again. So, okay, if you're here just to listen, that's great. On the webinar, on the teleconference, any hands up or question? Okay, so we good. So I hope that's not a sign of that we don't have a clue what ITaC is all about. But let's get through into the slides. So ITaC conceptual training for today. Basically, the objective of the session we've just put up is to provide an overview of what is ITaC for, why are we doing this process, explain some key changes, services and functionalities and so forth, how do they affect you, and basically right at the end we're just going to tell you what more dates are coming and Q1 go live, what are we looking at in February Q1. So just from an ITaC program overview, JSE is currently providing trading, clearing, and settlement services for EDM, FXM, RD, and C commodities, as you see there. And what the ITaC, which is a multi-year project, is going to aim at doing is moving everything onto one trading and one clearing platform. I think that's quite clear from all of the communication sessions we have had, but this is just to recap what ITaC is all about. Moving everything onto one trading and one clearing platform. That's where you guys get involved because you need to know how to access these new platforms and what changes and how does it affect you. So the first step, phase one, which we are currently busy with, is going to be moving the equity derivatives and the currency derivative markets into the new world. So commodities and interest rate derivatives will follow. It's in something that we call project 2 or phase 2, but for the moment it's currencies and equity derivatives only. So we'll focus on those markets. So if you're a commodities trader sitting here, you can listen, but I suppose you could leave and get back to work. Right, so connecting to the JSE, high-level architectural design that we're going to be doing. Just to give you what we're trying to do here is we're not keeping it technical by any means. We're trying to just show you how it fits together from your software providers or how you actually connect into the system all the way into trading on a normal day, so that you just get a bit of a feel for the whole end-to-end process and it doesn't just become I click, I can't connect, and then you phone the JSE, and there's a better understanding, hopefully, after this presentation. So connecting to the JSE, here's the market layout. Trading market layout. It looks busy, but basically we've grouped these functionalities into various groups. If we start on the far side, the red box, which is our market data gateways. In essence, there's a market data gateway system. We've got an unthrottled and throttled service. We've got a top of book service, which only sends you, obviously, top of book or best bid and offer. And that gets published out of our market data gateway. So here's a change already from how the current systems work. This is going to be sent out in a format called multicast. So it gets sent out to the market. You subscribe to it and read it. That is where you will receive your order, your public information, your session changes, everything to do with public information comes down those feeds. So that's one block on its own. On the far side, on the other side of the screen, we've got the trading gateways and the drop copy gateways. The trading gateways are all called native trading gateways. This is what you effectively will be connecting to through your software and through your front end as traders, potentially very far removed from this, but that's where trading happens. So market data gateways, trading gateways, and then in the middle we've got the post-trade gateway and the reference data. Reference data is for you. It's an IDP site where we dump a whole lot of information about an instrument, its strike price potentially, its expiry date, and a whole load of embellished data which you pick up, or the software providers pick up, or your systems. They read, and then they're able to present this nicely in a format that you can understand on your screens. The post-trade gateway is used for all of your post-trade activity purely from a trading perspective. So this is where you will be reporting trades. That's where you connect to and through to report your off-books onto the market, which is a fixed gateway, the native gateway being a native protocol. So that's a little bit more technical, but that is what you are actually interacting with every single day. If you come up in the morning and you load up your trading system, you're interacting and trading onto the JSC. This is the background and how your software providers or in-house developers will code to make sure that everything that you currently do is hopefully masked, hopefully doesn't change. The same screen comes up on February Q1 or when we go live as you currently know. So this is the background on how they will be masking you and your changes to make sure that you can trade as normal every day. And at the bottom, internal systems, we've got our real-time screen. So the same system that you're using on the equity market for surveillance purposes is going to be receiving the equity derivative and the currency market information as well now. We've got the integral derivative trading systems into the trading system, information system. Just high level, very high level of what it is that we are replacing and moving into. All right. If I can ask anyone, both on webinar, teleconference, and on any slide, nicer than keeping all the questions to the end. Yeah. So these are the gateways explained as I just went through you with them. So just to go back, basically, if you're a trader, if you are just you're not technically inclined or anything, this is a nice background, it's nice to maybe understand it. This is what now your software providers or whoever you've chosen to replace that front end that you normally use with. They are going to mask all of this for you, that your experience hopefully stays as simple and as non-complex as possible. And hopefully you have using some of these screens already to be able to test. As we all know, the mandatory dress code is Saturday, so we expect most of the firms, or all of the firms, in fact, to be there. So your software providers are going to mask all of this for you and make it look usable and put you on the front end. Okay. Matthew, if there are any questions, raise your hand from the webinar. Okay, so just quickly going a little bit more high level, current views and new views of how you're going to be connected to the JSC trading system. Currently, you log into Neutron. You've got your trader ID, you've downloaded the software from the website, and you're logging in as yourself every day onto the system that then comes all the way to the JSC. Big red cross there, obviously. The change is going to be that you are now going to be logging into your firm's software application situated at your office or hosted wherever you decide to host your software. And then there's a connection through this thing called the comp ID. Now, the comp ID is going to be popping up all over the place. That is what logs in. And maybe it's not that important for you as a trader to understand exactly the technical part of it. But effectively, if you look at this box now for the new corporation, the new world, any software application issues, any login errors, any I can't trade on this market, anything that goes wrong from you being able to do what it is that you normally do, now actually sit in that block. Sits within your firm, your software provider, whoever you've outsourced this logic to. So if we get a call that says, I cannot log into I can't log into my trading system on the EDM market, we will probably ask, who's your software provider, where are you trying to log in, which firm are you from, and then redirect you. So your first point of call changes completely from not being able to log in onto Neutron and JSC in customer support to your customer support version on the firm's, the software that you happen to be in. Now, this is not new for most of our equity market clients, as they're already using self-developed software or so, or using SIPs and so forth. But it is for anyone that's only been using Neutron, only been accessing the Neutron application. If you've been using other software to access us via the API currently on the STT system, then you obviously know the drill there already. Okay, but this is quite a big change to say this is the new world on. You will not be connected directly from our software, and that just speaks to it. We won't be providing any software, but that is old news, and hopefully to you, you've all selected your softwares already. Then just going a little bit deeper into the trading firm, so to visualize this again, we've got the traders or users sitting at the top of the screen there, connecting through to the terminal, and you've got all these comp IDs that are now connecting to those gateways that we spoke about in the first slide, those trading gateways, the market data gateways, and getting into the reference data service you see doesn't get connected to during the day because it gets referenced once the files get provided. We'll get into that detail. And all the reference data is actually uploaded into your system as sort of the start of day process by your software provider. But each of these comp IDs, you have a specific comp ID that logs into trade, a specific one that goes into post trade, and the drop copy service. Now, each of these services have slightly different uses. Trading gateway will be obviously your trading, your submission of orders, quotes, and all of those on-book trading activities. And your post-trade gateway is purely for interacting with in your firm, either on a single-sided off-book trade or reporting, or with other firms when you do dual-sided trade reporting. Your drop copy service is your recovery service for if there's any outage or if there's any problem on your systems, where you send a message known as an own order book download, basically saying to you, as of this moment, this is what your orders look like, and you recover through them. So knowing each of these gateways are mandatory to code to or connect to, and that is just sort of for your understanding a little bit better to know that the comp ID will be connecting on your behalf for the whole firm. It is not a one-to-one relationship for one trader for a comp ID. It's a connection that gets established from your software, from your systems, from your firm to the JC, and it is live. And once you log on to the systems, that happens in your environment. Moving on, just for some information, subscribers, very similar. Obvious reasons, they're not going to be connecting to any of the trading gateways. They just listen to the market data and provide that information further to all of their clients. Similar though, they do log in with a comp ID to re-request data should they miss the multicast feeds that are being pushed out by these antenna-looking Wi-Fi. It's meant to show that it's not a direct connection like you used to connect to on a TCP level. We're sending the data on the multicast level and just saying, here, catch. If you miss any sequence number, you go back and re-request it. Clearing member firms will also have a slightly different setup. You'll notice they've got no access to the trading gateways, obviously clearing members in their own right, and this might be a little different on how you might be working it at the moment. The clearing member does not connect to any trading gateway at all. They're not allowed to do on-book trading. However, they have the users that will connect to drop copy and post-trade gateways. Specifically, as a clearing member firm, they would log in there to get a copy of whatever their trading members are doing. So they've got the option now to receive, as we call it, a drop copy or a post copy of everything that each of their members is busy with, and they can do risk analysis or surveil their members on their own. So they have this access which we're going to provide to them, which is a bit different to the current workings. What they also have is they will get a comp ID, again, a connection. You can see it sitting with them in their firm on behalf of each of the trading members. So they will log in at some point on your behalf to be able to book trades, if that is what you've outsourced to them, or in the case of a default, or if they have to manage the firm because it's gone into further those kind of circumstances, they are able to do reported trading on your behalf. So that's a little bit of a change from how it works. That's all enablement stuff. We're currently busy with about 90% of all the firms, and the enablements have been done through our customer support team and the trading team. So we're looking quite good there. It's probably not going to affect you as a trading member, but it's good to know that this is available to the clearing members. They are able to log into those post-trade gateways and then do these trades on your behalf. Slightly different to logging in as a branch currently because of the systems being completely separated from Neutron, where you log in, you're logging onto the system here, onto the JC services, all integrated systems being split out into the clearing and the trading systems. Okay, I'll pause there because hopefully I haven't lost too many people. Matthew, no one questions, webinar still okay? Anyone in the room just wants to clarify, or happy to move on to, yes, just hang on for the microphone, sorry.
Hi. Sorry, back to the first slide, very first slide. Spot bonds. At the moment, we use Neutron to load the what's it code? The clearing code, the So what will happen with spot bonds? Will we still use Neutron for that?
Yes. Yeah. Correct. So,
Okay, so we'll have
first slide.
So we will have two separate trading systems.
Correct. So if you're using Neutron purely as Neutron only, and you haven't made a plan to integrate it maybe into one front end as such for all markets, you'll still be connecting through Neutron to all of the other markets. So it's only the equity derivative market and currency market you find a new software provider to connect you for. If you're only going to be using Neutron, yes, you connect to that same system. So it'll be like, that's why it's a two-phase approach, and eventually it'll move back.
Hi. Will the spot bonds migrate at the same time as the IRD?
Hopefully, we're looking at that. Project 2 planning hasn't commenced too far down the line, obviously with a couple of changes that we're doing and moving more into an agile route. But hopefully we can swing it across in one go because that's quite, members are linked, yeah.
So we are actually going to consult to the market around the migration of those. We'd like to do it more agile, but maybe it's not going to work. So we will be consulting on those timelines. Okay.
Okay, from the webinar.
Hi, Martin. We've just got a question. What's the difference between throttled and unthrottled market data service?
Okay. I'll go to the slide where so what we have, it's the red block we're referring to, throttled and the unthrottled servers. We have bandwidth constraints in the country or certain members, smaller members compared to bigger clients. We offer a service where if you are not specifically bandwidth conscious and you've got big pipes or fiber coming into the JC, we have a service that is slightly larger in throttling rates that we send out, and another service that ensures that we don't send out more than an agreed bandwidth amount. That detail is in our connectivity document. I'm happy to share it with after the briefing when we send this out, just to refer everyone to it. But it's basically just going to allow you to not get hit with too much data at the same time if you are limited on bandwidth.
If you're a latency sensitive client, you would probably subscribe to unthrottled because it means you get the data as fast as we're publishing it. Throttled is more for the guys who want to get it within a certain bandwidth, as Martin says. Okay.
Yeah, and that's why you'll notice we've got the level 1 service as a throttle service because it's top of book, it's trades and statistics. So we've got no throttled and unthrottled service there.
Sorry, Martin, just a follow-up to that. So does the bandwidth influence the quality of the data, and could you give some numbers, some latency numbers?
So no, it's effectively trying to send, let's say, 1 meg of data, and the cap is only allowed to send 500 kilobits or so. We'll only send you 500 in 2 seconds, whereas the unthrottled rate will get the full 1 meg. So you will get maybe that burst or so a little bit faster. The sequence numbers determine the data, so you're not getting any other data, you're just getting it faster or slower. And the latency on that is obviously as soon as it leaves the JSC building, depending how far you are you in JSC co-location, are you in Cape Town, overseas? I cannot speak to those rates, but it depends on how far you are.
Give them co-location or? So
co-location rates, our SLA in co-location currently is that inbound and outbound rates must be below 50 micros in and out. So I think round tripping colo is below 150 microseconds at the moment. So that's data going in and out. So call it under 100 microseconds from the data to just be pushed out to you in co-location. Very, very rough figures though. Yeah.
Just one main difference as well is, remember, current derivatives, you don't get the full order book. New derivatives, you get the full depth of the order book. And because it's multicast data, which is not guaranteed, your systems will, if they miss messages, they will come and re-request them. So at the end of the day, you will have all the data. It's just about how quick you can consume it and catch up. That's the difference between unthrottled and throttled. Okay.
Okay. We actually are clearing members, so I just want to confirm with the drop copy gateway, we won't have access to the trading system, but in a scenario where we're supposed to report only trades, will we have the functionality being a clearing member?
Yes, so you as the clearing member in essence has that functionality because you would have gotten if we take the screen now as an example, you would have gotten Comp ID 1 and 2. Comp ID 1 is on behalf of one of your members and 2 on the other. So when you report your trade on behalf of or using a certain trading member to book that trade, you will log in with the appropriate comp ID because it exists under the trading firm. So we will see it as the trade coming through from the trading firm, because obviously the trading member has the right to do trading and not the clearing member as such. And your software and front ends, if you want to take that back to your front end provider, but they're quite clear already on when you log in and your drop down of firms that you're now going to be interacting with. It knows where to route it as such. So you don't have to think about, I need to log in with this. In the morning, everything gets logged in for you. And if you do a drop down firm, it knows I send it through there or here or that. Okay.
And there has been some queries on the trader ID. So clearing members will get a trader ID on behalf of the members that they clear for. And that's to do those reported trades, okay, through the post-trade gateway.
We'll get to a couple of those slides on firm setup, I think, in a bit. Okay, thank you. So just, we stopped at the clearing member setup. And this we spoke to about. So just to summarize, a comp ID, just for your information, later on when you go back to the slide, a comp ID is used as known as an interface user, interfacing between systems. It's not you, it's not your trader ID. It's really allocated for those channels as we spoke about, just a summary. So don't get confused between trader IDs and comp IDs. Trader IDs are human, comp IDs are electronic machine connection things, for lack of a better word, if you want to keep it light. Okay, JSE market participant structure. We're going to quickly go into a firm layout just to go into, now we understand how we connect technically, and you're probably going to forget about that if you're a trader immediately when you leave the room. Now we're going to look at the firm. What is the layout? How are you logically created on our side, and how do you look in that regard? So in very broad detail, you have your firm, and you can see it's the firm level you exist under. So the firm level, we'll get into the naming convention in a moment. You've all been receiving emails on a new alpha code and your new production identifier codes and so forth, which we'll get into. So a lot of the compliance officers will know this already and how it looks. But this is the logical setup on how you can visualize it. We have this comp ID group, again, the interface user groups, where we compile all of your comp IDs. And the naming convention there is we take your alpha code, we put another letter next to it, and we go and then add 0, 1, 0, 2, 0, 3, 0, 4, etc. That's just the number of the comp ID. So for a letter, let's go and say your alpha code is ABC. Letter N comes after that. That's for the native gateway. D for the drop copy. P for the poster. So that's just a technical way on how we can easily identify if someone phones and says, I can't connect on this comp ID, we immediately know what to do. So we basically create a trader group under the trader group level that is just for comp IDs, and we put all the comp IDs in there. Nice and technical. You probably never have to see it again once it's set up and your software works. You leave that up to the more technical side of your business. Then the trader group level continues under trader groups. Now, you can imagine them as what you currently know of as branches. However, they are not branches whatsoever. So never confuse the two, because branches, as we know them now, you actually log in with them. There's a lot of ability attached to the branch. In the trading side, we now got to realize that a trader group is a logical separation purely decided by your firm. So as an example, we see there's 3 different trader groups here. It could be that this means that there are 3 different regions, maybe, that this trading member trades from. Maybe he's got a Cape Town, Joburg, and a Durban office. And he wants to actually split his logic through his internal system that he knows exactly where what sits. Or you could actually have a trader that has, or a firm, sorry, that has one trader group. You do not need numerous trader groups. It's up to you how you would Chinese wall your institution. If you want them set up maybe on a desk level, the possibilities are really endless. It's completely up to you. What we will do is we will place every single trader ID into the trader group that exists. So when we get to order submission a bit later, you'll see that there's mandatory fields that you have to submit, and one of them is your trade ID. And the trade ID gets concatenated, basically taking the trader group underscore and the trader ID. And hence, on every message that flows back and forth between the systems, that unique identifier of who in the firm in what trader group is maintained. So the option does exist for segregation or logical separation and so forth on the trader group level. That's really what the trader groups are there for. They are not branches whatsoever. It's just to see that your front end can change or channel trader groups to certain areas. As you can see, we got the green and sort of differently shaded trade IDs. It's just trying to represent that trade ID 10123, the top one there in the first group. He might be active across all trader groups. Another one might be existing on all trader groups. but is not active. So we will have them all active. So it's not a nightmare for you to load a new trader. Same process as follows. You ask us for the forms. We check all that the right boxes are ticked, and we load him, and he appears in all of the groups. And it's up to the firm to decide what he can see, which trader group he trades through, if it is like that. But for the simplest setup, we can have one trader group that you put all your traders under and continue trading happily. The orange and blue, you'll see, are clearing member user IDs and back office user IDs. Back to the one question we had earlier on clearing members, how they'll interact. You can see you're actually existing under a trading member firm as a clearing member ID, so that we can actually see when trades get reported or activity gets booked, literally on the trade reporting side, who does it, where it comes from, and under the firm, but not having to give trader access to back office users and clearing member users. Okay, so that is the trading member structure of a firm. We keep going into the information subscribers again. You just see they have logins, comp IDs. They obviously have no traders. Very simple for them. They just listen to the data. And then your clearing member structure is exactly the same. However, we did speak about it earlier, where you can go into the firms that you clear for and do the trading. So you'll see your clearing member and users sit under the actual trading member firm. They are not under the clearing member firm. So the clearing member firm, as it exists on the trading engine, is purely based on a connection where they will start listening to your activity, your trades, and your orders if they do so wish to, and there won't be any actual traders also under their firm. Just the logical setup, maybe a little bit different to what you are currently used to. Then trading member structure, just to go back into the trading on behalf of a client by clearing member, we're showing you again, there is that comp ID that sits there. We're calling it a special, we're giving it a special name. It ends in anything above 80. So we can identify immediately if there are any clearing members logged on behalf of their clients that have trouble because their comp ID start from 80. But there's your comp ID sitting under the trading member firm, just to illustrate it quite clearly. Okay. So moving on to the market participant structure, the participant code. So we're calling it a PIC. It's just a production identifier code. And basically how this code is going to be, this is your new firm code. And there's been a lot of anxiety, I suppose, and questions in the market to understand what is this new firm. It's just an identifier to say this is your new 11 code firm name that you will be using for all derivative trading. So because we're moving on to one platform and we're merging all the firms together, you will have one firm code identifier, and this is how we'll get into how it is created and how it looks just after the webinar question.
Okay, Martin, we've got 2 questions from Bernadette. Would the JSE or front-end vendor be required to set up trader groups and link traders into trader groups? And the next question is, does being in a trading group A mean that the traders in trading group B are segregated and do not have access to trader A orders?
Okay, so we facilitate the request will come from compliance officer, head of trading, or however in your firm you've set that up, but mainly from those two to say, this is a new trader and these are all my trading members. We will put all of them into every trader group. You will request trader groups yourself, so you decide completely how you'd like to set up your firm or your logical separations. When we get that request, we don't limit where the trader and in what trader group it is, because it's a bit of a nightmare if we have to move traders. Just to go back to my example, to say a trader moves from the Cape Town to the Joburg office, we must go into the system and change them around. So they exist everywhere, and it's up to the software vendor or your service provider to ensure that the segregation then happens. So if your software provider sees these orders, he should be quite capable of segregating guys in trader A from trader B in the different groups that they don't see each other's orders. And then you obviously have a head trader or a surveillance officer or something within a firm that is then obviously allowed to see all of the orders and trades that go through the system. Okay, so back to the participant code. The first 3 characters will be your alpha code, and basically it's going to be the alpha code that we give you. That's the same one that we're going to use to name your comp IDs. The next 3 letters will just be 3 X's, and then TM will notify you that you're a trading member, and then 001. So that's your new firm identifier, and that new identifier will be what your firm will be known as across all derivative platforms once ITaC has gone live completely. So you will have one firm identifier, and you will trade all of your derivative activity under one firm. And hence the setup and the software providers will need to get a little bit more clever, I suppose, that you're not logging in as one firm, because we're trying to get away from numerous logins. So you can have one trader ID logging in, trading all of your asset classes, and eventually, once project 3 or the end of that, we haven't even named it yet, we're trying to merge, as you can see in bullet point 2, the big code, which you're aware of in the equity market. Those two codes, we actually want to merge them all into one firm. So for those of you that are already equity market members trading on the Millennium system and are now on this journey onto the derivative system, you will notice that your alpha code in both the markets has actually been the same. So your comp IDs and everything starts looking very similar. We've just set you up for an equity firm currently because we didn't want to go through too much hassle with the market there as well, and then one derivative trading firm. So that's the vision going forward, one firm, and then eventually trade everything through one trader ID. So that's already a change. Sorry, just back to the webinar for a question.
Yeah, sorry, again from Bernadette, just to follow up. She apologizes that she may be missing something, but what is the point of the trader groups then?
So the point of the trader group is how you would like to utilize them. If you want to use one trader group, if it comes into your system, system can sort out either to send, look only at the trader ID and send it to whoever is allowed to see it. If you have other trader groups, if you have 2 more trader groups, for instance, you can fully separate your system to say only these guys, they log onto a central system, all the orders hit that system, and you can start sending those orders only to the Durban branch or the Cape Town branch. Plus on the off-book trade reporting, when you submit an off-book trade, I think it might be necessary if you have a lot of Chinese walls or different firms that on receipt of that message that hits the software, it recognizes that this is for your firm, but for this trader group, and you can route it to the right area if you have a very sensitive business unit that might not be able to publish this to all front ends.
And then just a question from Tamsin Crawford from Iris. Not sure if this will be covered later, so I'm happy to wait if it will be, but I would like to know for RTC, would you require one comp ID per trader group, or what would the purpose be to have multiple comp IDs for RTC?
Okay, so currently we're on the trading conceptual trading. We had RTC or the clearing trading last week, I think Friday. I'm happy to get back on that in detail to, we won't be covering it in this session. It's been covered on Friday. We'll get back. Okay, so just to recap again, one firm identifier, one trading alpha code, and so forth for this vision of actually having one firm to trade through in the future. On behalf of Comp ID and trader groups, it's just put out here once again. I've spoken, I think, at length to it, so I'm going to skip this slide. It's for your reference later. Just going into users. What are users? You would remember back on the slide we had the firm, the trader groups, and then users. Users are all grouped into clearing member users, back office users, comp IDs are users, and trader IDs are users as well. So they're all grouped under this one user level. They just get different roles on what they can do. A comp ID can log in, a trader ID cannot log in. So they all exist under this level. And also just going back into the clearing member user ID and the back office user IDs, which we've explained quite extensively while we had the pictures up. Okay. If there are no questions, we'll move on to the JSE daily life cycle, just a view of the full trading day. So we're going to try and go into what happens from literally beginning to end, and you'll see it spans quite a long time and goes across days, obviously. So here's our timeline. The dots represent time in between. Well, they don't really represent anything. It just looks better. So the start of the day, it begins at 11 at night. You can see the 11 o'clock at night, and between 10 o'clock and 11:30 the day before. This is when we publish the client reference data files. So in the evening, it's basically after all of the JSE systems and everything internally has finished for the last day, we are getting ready for the next day. So at that point in time, these files are for tomorrow. So they get published, they get made available. You can see maybe there's a new listing of an expiry and so forth. They will get created today, but at night in response for tomorrow. So those client files are available. Then we go into sort of a dead period, and then we publish these client reference data files again, potentially at 4:30 in the morning, should anything have changed in between. 99.9%, if not 100% over the last 5 years that we've been running this logic in the equity market, we have not had to republish. We will definitely advise if we do republish, if anything's changed throughout the night. But software providers and own solution developers should probably be aware that this is have a double check maybe at 4:30 if the files have changed or anything's been updated. Then we move into sort of the trading day. In this period here, we've got the startup of trading systems. So the systems come up and all the health checks get completed by about 5 o'clock. And then we start up the applications at about 5:15. This is when users can log in. Now remember what we spoke about users, that includes the comp IDs. So comp IDs can start logging in from 5:15 onwards around there. Now that's an early time if you think about when trading starts, so you can have your systems ready very early in the morning to check technical health, logins, and so forth to get ready for the trading day. At 6:15, we have an operational day start. So our system says the day actually starts. So before this period, we were in an inter-day period. And at 6:15, we move into literally day start. So the day starts from this moment onward, and we're in intraday. And systems are a whole lot more limited. Reference data cannot be updated, and so forth. We're getting ready for the trading day at 6:15. 6:30, the market opens. It is not trading that opens, but the market comes up and says, the equity derivative market and the FX market are now available and ready. And then over the period of 7 o'clock to about 8 o'clock, depending on the different sessions we'll get into, is start of trading. Start of trading is a new session. You would not be used to it at the moment, but all it is saying is that the sessions have now started. We are in this start of trading, you can't enter orders. It's literally a notice to the market. Again, as you can see, you're moving through each of these steps to say you can log in. We tell you the day starts, then the market opens, and then the start of trading session. So it's almost like little tick boxes you could probably see being ticked off throughout the day to ensure that trading is going to come up as expected. Then we're going into opening auctions, obviously not for all markets and not for all instruments, but just broadly over that period. And then over here, we've got continuous trading from about 8:30 onwards for some market, and then 9 o'clock further. We'll get into that detail a bit later. Then we have the trading sessions move into a post-close session. Post-close just means continuous trading has stopped, and we're moving into post-close session. You can manage orders in there and delete orders, actually. You can't add in new ones, but you can delete orders because we're moving into this carrying over of orders, new time in force where you can have orders persist throughout days, and that just gives you a nice period to sort of markets coming down and we're ending the sessions. Over this whole period, obviously, you can do your trade reporting from 8 o'clock till 6 or 6:30, and then we move into pretty much the end of the day. The market will close at 6:30. Again, that's when the market comes down. Operational day will end at 8 o'clock, and at 8:30, the application process is shut down, and you will get disconnected from the gateways. So if you look at this, you're going to be connected technically through those user IDs from about 5:15 to 8:30. Now, that's important if you are adding new software to your systems, if you need to do testing. Heartbeats will be flowing all the way up till 8:30. So there's a lot of time for you to test applications and Alcons and so forth. Okay, just a summary of what happens again, as we spoke about at start of days, establishing connections and logins. The intraday market activities will be all of your trading, your implied orders, your quotes, your report to trading, drop copy functionality, and so forth. And then the end of day is really going to be creating these files right at the end of the day. It moves back into by 10 o'clock on that same day, we will have all the reference data files available for the next day. So this is your typical day, all else equal, that we will go through for the derivative markets. Any questions on that? Otherwise, we'll fly straight on. Okay. Intraday trading sessions, just as a recap, it hasn't changed a lot. There's on-book trading, there's off-book trading, and the sessions that happen on on-book trading, like we showed in that graph, are your start of trading, opening auction for the equity derivative market, continuous trading, and post-close. The off-book session will also have a session that says start of trading, just to tell you the session has started, moves into a trade reporting period for the whole day, just stays in that period, and then goes into post-close as well. It's just transitioning nice and neatly. Then on-book continuous trading will commence at 8:30 for equity derivatives and 9 o'clock for currencies, and then cease at 5:30 and 5 o'clock. So not a massive change there, keeping the systems the same. And then off-book trading as well. 8 o'clock, you can start reporting trades till 6 for currencies, and then till 6:30 for the equity derivative market. We have introduced unscheduled sessions. Those of you trading the equity market will know of volatility auctions. So we are putting those into the equity derivative market. They will stop fat finger problems, massive price movements, or any changes in the price that are from a trade to trade basis seemed as excessive. The values are published in our volume 0 or what they will be. In the currency market, we're not putting in price volatility auctions and then moving into a auction period for a few minutes. The price bands will just exist in a way that should you put in an order that is materially going to move the price from the last trade, your order will be rejected. It is a little bit different on how currently you enter your orders on these price bands. They're slightly different because currently your price bands will only limit you to actually put in an order in a certain band for the whole day. Should the market move quite a lot, that band obviously gets squeezed and the bottom gets a bit bigger. This one, it's got in the new world, we don't have that limitation where you can't put in a trade if you want to really far away from market, let's say at 1 cent and it's trading at 10 Rand. You can, but should it hit, you will get rejected because of your trade moving the price at such a big percentage. Okay, then moving into futures closeout, there's a bit of a change coming there because of the integrated systems and scheduling it in a new way. Futures closeout trading for all on-book activities, and obviously it's only for the equity derivative market, will stop trading at 12 o'clock. So as the auction starts in the equity market at 12 o'clock to start determining this price and last for the next 15 minutes, so too will continuous trading automatically stop on book for each of those expiries, only those expiries that are going to be closing out on that day. And off-book trading obviously will continue as per normal. Right. Then JSE instrument reference data. So there's a new way of identifying instruments, new system. So the codes that you're used to, and there's extensive documentation on the website on how these codes will translate, and we'll get into that in a few minutes. It's quite important to make sure that on your new front ends, on your new systems that you're going to be getting, how does the vendor display a price? There might be a unique identifier that they use. Just familiarize yourself quite clearly with what you are trading and how you identify them. But from a JSE perspective, we basically have a new naming standard that has 3 instrument identifiers. And they are the contract code, which replaces the existing 4-character code. The International Security Identification Number, or your ISIN, is getting introduced for equity derivatives and currency derivatives. And then your new unique ID, which is numeric. So the system actually only cares about the third one. From a system perspective, when you are trading an instrument, we just look at a number. It doesn't look at the code. It doesn't look at what segment it's in. It just wants a number. And the ISIN code is used because that's going to be a unique identifier per instrument. So there's a unique, completely unique identifier for the instrument. And then your contract code, which will go into the standard at the bottom, will really explain more into what you're trading. So it's made up of, and this is just an example because there's various contract codes, which we have documentation on the website on as well. The expiry date, an alpha code, settlement type, call or put or strike, and then the maximum length of that is 50, and we got some examples down there. So it'll be a 01 deck 15, Anglo, physically settled any day, and then the strike rate DN stands if it has a 23.99C, for instance, you know it's an option, but these are so they don't look as fantastic maybe as you used to. There's a mapping document where we take exactly what is currently on the system and we'll give you the new code. But please ensure that when you are trading these, when you're testing and when you're checking it out with your new software providers, it makes sense. You can identify the instruments quite clearly. It's just from the back end and the reference data, it's changing slightly. Okay, so this is what I spoke to, the mapping of the old contract codes to the new. We'll call them old system codes. There'll be a document before go live, and it's in existence already, where we are showing you exactly how to map those instruments, especially for those that are going to be carrying over. Anything that expires, obviously, before go live in Feb, it's not going to get carried over. But for those that do, we'll map them quite clearly for you. I think we've gone through that. Then another change that's sort of coming. Sorry, just a question.
Yeah, sorry, Martin. Will the closing auction timing remain unchanged?
Closing auction time.
Yeah.
So there's no closing auction times on the derivative markets as such yet. Equities is not changing. It's just for the derivatives. So no, we're not putting in a closing auction or closing auction time. So the dividend neutral change that we're introducing is currently in the neutron system. We have a virtual contract where you trade this dividend neutral. So the explanation is all on the screen, but effectively what we are doing is when we going into the ITaC implementation, you will no longer have a dividend future that is a dividend neutral contract. It'll be one contract and journal transactions will be processed on this contract. So in essence, if you're looking for this instrument, it won't be there. If you have further questions on how this will trade or so forth, get in touch with us, but we are not going to do dividend neutrals the way we do them currently in the neutron system. They'll move off for the reasons that we have stated. Okay, so it's just something to just think about it when you get back. Maybe just pop us a mail if you have any more questions on dividend neutrals. It's one big change. We can also automate the corporate action process. So corporate action process will be for the reference data updates, which is our master data system, internal system. That's where all of our firms sit, our instruments sit, our corporate actions, everything gets managed in this MDS system, the master data system. And then the positions get adjusted in our post-trade clearing system. Now we went through quite extensively in the clearing member session. So I'm just highlighting it here for you to be aware from a trading perspective as well, that this is going to be, the corporate actions basically will now be managed by the same team that manages the equity corporate actions, the equity market corporate actions. And market notices is a big change, will no longer be issued, but information on the treatment of derivative positions as a result of corporate actions will be available on the website. So we're moving also across to less spam on your email and maybe just links you can reference and have open continuously. Corporate actions on international equities will be sourced through Thomson Reuters information. Okay. Then we move on to user-created instruments. Currently, so they're called user-created instruments in the new world. You probably just know them as creating your own strike that you want to trade, and you're probably not aware that when you create the strike, you create the instrument yourself and it trades at the same time. Now that functionality needs to exist from your software perspective already. However, if you're looking at it in a technical perspective, the messages that go through the system are twofold. Instrument gets created, gets a response back from the system saying, thank you, it's being created, and then you trade on that instrument after it's gone back. So which of those instruments can you create? Any day futures, any day options, the naked options, and delta options. So in the CSV file, again, those reference data files we provide you, the software provider should grab those files and tell you which ones you can create an instrument on. It'll be clearly identified to say on certain ones you can create your own strikes effectively or your own instrument, and only those ones that are marked as such will obviously allow you to do that. Your instrument can only be created out until the furthest strike date. So if you want one later, or you're going past an expiry where we don't have one on the system, for obvious reasons, you would then contact the JSE to request a loading of the strikes further out. However, we are loading strikes periodically. They will be loaded as and when expiry of some nears, and they will get loaded. But if there's a special request to create something further out, that's still a call to the JSE. But anything in between the furthest out and nearest, so if we take the dollar rand, for instance, I mean, that is listed very, very far out already. Any date in between that you would want to create an any day or an option or an option, you can create it on any of those days. Okay. These instruments will also then appear real time in the reference data files, and at the end of the day, they get embellished with a whole bunch of information from the master data system, because that is where the I's and codes sit and all of the further information, and that will be, again, for the next day, you'll have embellished data, I's and codes that come through in the CSV files. Okay, then we move on to the next section, which is JSE order types and TIFs, TIFs being time enforcers. There's a bit more enhancement to this on how you'd like to trade and maybe the options you have to submit certain orders and trades in the new world. So just as a summary again, order book is a list of orders. I think we all know what an order book is, but where the interest of buyers and sellers are in. Sandra mentioned earlier that your order book is now complete depth. So because of that data feed that we push out, we don't limit the feed. Every order gets sent to you. Every order is visible, obviously still anonymous, and it can be displayed. So it's probably a front-end setting you have to ask for if you just want to see top 5 or top 10, but you have the ability to actually find your order everywhere in the whole order book in the new world if your software provider so provides that to you. So it might be something worth checking. Okay, matching, just last point, obviously will be anonymous on the market. Okay, this is a bit of an ugly slide, but mandatory order entry parameters that we spoke about earlier when you're submitting this order through this message through the Mitch gateway, and it might help you understand a little bit on how these orders are tracked potentially, or in the different trader groups that we spoke about. Some of the mandatory fields that you have to obviously put in is an instrument ID. What does it look like? That is in the form of a number. So that is the number that will be used, as we spoke about earlier. The trading system only uses the number. However, your embellished code and what it looks like on your front end will give it to you in a human readable, interesting, a visible, a logical view. The client order ID will be a unique number, and that is the number. Technically, if you're ever interested in understanding, some of the softwares show you your orders highlighted, obviously in the depth, and it uses this order ID. Sorry, not the client order ID, the order ID, to track your order on the Mitch gateway and show you exactly where it is. So they're completely sort of backward compatible or reversible, if you want to call it that, to find your order always on the market data side. The firm ID is always sent on the order, the side you're trading, obviously the time in force. This is now the validity of the order. So is it a day order? And we'll get into a few more options of those. It's not just day that we have now. There'll be good till date, time, maybe a fill or kill, and so forth. Then obviously order quantity and the order type, your limit price, the capacity, principal or agency, expiry time if you're trading good till time, expiry date for good till dates, and then your trade ID. So there's your trade ID will be on every single order that goes in. Hence, your software can determine if it gets those messages, what to do with it, how to flag it, where to send it, and your trader group is there as well. So I hope those questions are answered from earlier about trader groups. Why do you need them? They appear on every message, so you can do a lot of stuff with just interrogating those messages. Your client account, and this will be not the BDA account for the firm. This is an error. We'll change that before we publish this. This is your account where it goes into the clearing system on the RTC side. Cancel and disconnect is a very interesting field. That is a mandatory field as well. Basically, what it means is if you do happen to lose connectivity, again on the comp ID level, not maybe between your firm and the software provider, but to the JSE, this option on every single message is there to say that if I can't see the order, pull it. There are time delays. There are quite technical ways on how to do this, but it might be an interesting thing for you to look at if you are trading and quite keen to know where your order is not out the market. That possibility exists on every single order. So then going into the order types, we've got a market order. Obviously, you only put the volume of the shares up. You're trading at the market, so whatever you're putting in, buy, sell, is going to hit for whatever's on the other side of the order book. So they'll execute against all possible price levels. If there's enough volume, it'll hit whatever. So if there's a huge gap in the order book on the opposite side, it'll go through. I think most of us do understand what market orders are. It's just the different types that will be available. Limit order, you're putting in a limit price. Stop orders exist and stop limit orders. So these are new introductions that come from a system perspective. You might be using some of these through APIs already. However, the system is now providing these as sort of base, and everyone has access to these orders. Then we've got two new order types that are not available in the equity market at the moment, and they are market if touched order and a market to limit order. So basically, a market if touched order is almost, if you want to understand it in a way, as a reverse stop order, so it's used to take a profit. And a market to limit order is really you put a market order on and it converts to a limit order automatically as it hits trades. It uses a dynamic reference price of the instrument, meaning the last traded price 99% of the time, and then it will reside on the order book as a limit order to be hit further as a passive order. So it's just a bit of detail in there. I won't go through all of it, but these are just order types that we provide to you out of the box to all members. Everyone can utilize them. So it's just a case of getting your software providers to code to those or make them available to you as well. Right, time in force validity. What types do exist here? We've got a day order, obviously self-explanatory. It's there for the day. At the close, these are orders that we can put in at the closing auctions. I know we don't have them at the moment, but the system is scoped to potentially start putting in at the close orders. There have been requests. It is not available at the moment, but it could come through in the future. Fill or kill orders, fill or kill, so completely executes the full order, the quantity you put in, or deletes the order. A good for auction, should there be any auctions, opening auctions or intraday auctions. There's obviously also been a bit of chat on creating numerous intraday auctions, as you can see for the next one on GFX. on the currency market, maybe numerous intraday auctions that trigger or so forth. So the system's got these time enforcers available, and we'll start, bringing them out with more functionality as we go along on this journey of let's go live first and then enhance the systems. But there's a lot more available on the system at the moment now. The good till date is obviously your order that can sit in the market for a longer period of time, your good till time, and then your immediate or cancel basically works very similar to your fill or kill. Hit it or, hit as much as you can and then cancel the rest. At the open is used to just put your order into the opening auction, and then it doesn't persist throughout the day. And then your good till cancel will be an order that you can put in very similar to your good to date, but you just leave it in and it stays for a period of 90 days. So order will stay in. Okay, then just to move into off-book trading or reported trading, single-sided and dual-sided, just because it's also changing a little bit on how we spoke about the post-trade gateway and how clients are connecting through that gateway and what you now have to submit. So reported trades are concluded basically outside the central order book. They go through the post-trade gateway. They're on their own order book, which we call the off-book trading order book, if you want to call it that. And they're available for single-sided and dual-sided off-books. All the trade types associated with the trade reports will ensure that trades are published. So every trade that gets booked is immediately published, size, volume, and it gets sent out to the market on the market data gateway at the time of you receiving your trade, a couple of microseconds later. Single-sided trade reporting model, just to go through it, that's one firm reporting a trade with internal clients. One could be two different trade IDs, could be one trade ID in different accounts. And your dual-sided trade reporting is between members, sending a trade report to a member to accept and trade with them. So the trade report matching that the system will require will be instrument ID for obvious reasons. What are you trading? The size of the trade, the price of the trade, which indicates the tradable instrument. And if you have an instrument that trades on price, obviously you use price, and if it's on yield, you use yield. Trade subtypes, we have this in the document as well. We'll get through it in another slide. There are certain trade types you now have to select, which is probably a little bit different to what you do it, but we'll get to that point after this. But you have to specify what type of off-book you're doing. We'll get to that slide in a sec. Then the trade reporting model you're using, the date and time the trade was agreed, and a trade identifier that is assigned. So you'll put in, like you do now, a trade identifier close to the other side of the firm. You match on that. You can put in your own trade identifier for internal tracking purposes as well. Okay. So in addition, the details that get sent and are pretty much mandatory after the fact that you've explained now what kind of trade you're doing and what kind of instrument you're trading is your firm. And here again, the trader group comes out quite visibly. You submit, every time you do a trade report, you submit your firm, your trader group, your trader ID, and the account. And if you're trading with the counterparty, you are going to be asking, you're going to be putting into your system who you're trading with and the counterparty firm. Now, we've come up with how you're going to be trading with counterparties will always go through a public trader group. So we've created a public trader group that every firm has. Every firm has a public trader group. It's a file that's made available in the system. Software providers read that, and the name of the firm is attached to that. So probably if you're trading with a counterparty and you're selecting the firm that you're trading with, you don't have to go and know their counterparty trader group or the firm ID. On your front end, there should be a drop down to say, I'm trading with broker X, and you select that, or it does it automatically on your front end. So just maybe ensure when you do testing or this weekend how that will happen when you do dual-sided trading. Obviously, when you do single-sided, it's within your firm, so you don't need to specify a counterparty. Obviously, the side of the firm that's submitting the buy or sell needs to be specified. And then the trade report action. Is it accepted, declined, am I initiating it? And that's everything your software provider should, from a right-click mouse perspective, say, am I accepting this trade or deleting the trade, or what am I doing to it? Okay, backdated reported trade submissions. So just to reiterate, the derivative market will not allow any backdated reported trades, and all reported trades can only be booked on the same trading day. So you're going to trade all of your interactions or all your off books on the same day through the post-trade gateway up until the 6 or 6:30 time period. Then moving into the trade types, this is just a summary of the trade types and what you will use them for. There's a more detailed document on the website which we'll attach to the presentation when we send this out later it takes you through what exactly you need to submit from a technical perspective, plus why you would do it. So negotiated trade, we had a whole bunch of trades that we wanted to make available, all nice, new, logical trades, but we thought phase one is get ITaC in and just do normal trading for the moment. So we've introduced a negotiated trade. It's the simplest and most generic trade type, which you'd probably be using to say, I'm doing a reported trade, and it's an NT. Here's my trade type. Where it gets a bit more complicated or specific is your exchange for physical. So that's a transaction negotiated privately in which a future contract for a physical item is exchanged for an actual physical good. And this trade type is applicable to currency. Sorry. Okay. Just for the guys on teleconference, if you can mute your phones, I think it's making a bit of noise for others. Thanks, Sandra. Okay, so for the currency market, you'll have the exchange for physical, specifically need to specify that trade, and it will go through and it will be flagged as an exchange for physical. A roll trade, so roll trades obviously used to facilitate the closing out of a position in the near expiry contract, moving the position further. Now, because this will always constitute two reported trades, one selling and one buying, the trading system needs to be told how to link these. And there's a field called the strategy link ID. Now, it's quite technical, but you need to be aware that you can select a roll trade. It links it through the system on a strategy link ID. And your front end should do that automatically if your drop-down says RT. That then feeds down into our internal systems, into our billing system, and it actually has, and this is where you should probably read the document, it'll be quite good. It has a billing implication to you because of the billing setup of how roll trades are billed, where there's a 50% discount, as we're going to note in the future. So should you be doing a roll trade, but you're using an NT type where you're buying and selling, you probably won't enjoy that benefit of the 50% off. So just make sure that that works properly on your systems. Then we have a strategy trade. So strategy trades, in essence, what they are meant to be representing is you can do a strategy trade on book, like an inverse calendar spread, which we know as calendar spreads currently. We're just moving the terminology into more international standards because they're called inverse calendar spreads. And your delta options. Now, those are strategies. They happen to be instruments on the system, but they actually serve a purpose for you to get positions in two different instruments. So it's a strategy instrument. And you can obviously mimic the same trade or the same strategy, not through an on-book, but through an off-book, where you would be reporting. And it goes very similar to the roll trade, where you link two trades, where you'd be reporting a certain transaction, linking it to a strategy link ID, and then sending the next transaction in again from your front end. It needs to obviously look seamless. You don't need to worry about if you're a trader that you have to have a strategy link ID, but this is just information for you to say that how it will technically work, so that if it doesn't work like that or so forth, you at least have a better understanding. So the strategy link ID will be used to say link these two trades together, please. It is an inverse calendar spread or it is a delta option that I've traded sort of off book in essence. Then price adjust. Yes, sorry, question webinar.
Martin, from what time can we book any book overs, and are there any quantity limits?
So book overs, I think I'll have to come back to that question on the limits and so forth and when they can book. Obviously, all reported trading will be between 8 o'clock and 6:30. I'll come back to the book over question. I'm not quite sure if that's applicable. I might be completely wrong, but let me get back to that. Okay. Sorry. Price adjust. So there's a new trade type that's called a price adjust, and this gets triggered if the JSE surveillance team has cancelled a trade, or the process of you requesting a cancellation on a trade goes through the normal process. We have to reiterate that that process hasn't changed. The same rules apply as have been published quite recently on how you contact the surveillance team if you want to cancel a trade. But they have a price adjust where they will rebook the original trade, or they cancel the trade, but they rebook it at a adjusted price to, in the past, to make sure that all of the counterparties are maybe not as affected, or it goes to the right price, and so forth. So this is a new price adjust trade, which must be catered for by each member to, if surveillance does phone and say, this is what the process has been, gets in touch with the counterparties, there's a price adjust type trade that you initiate that will trigger the JSE surveillance cancellation of that trade. Okay, just to put it into perspective, I know this is quite technical, so we'll skip through it quite fast. Single-sided off-book looks like this effectively. Firm A, you've got your trader sitting in his office, interacting through that post-trade interface comp ID. Again, to make clear that you're going through a comp ID. It's not you chatting to the system, but there's a comp ID that does that for you. There's a trade submission that goes to the system. There's a request that comes back to the system and a confirmation. So because it's single-sided, you're already sending everything in your first message to say buyer, seller, it all matches and comes back. And your two trade confirmations, your trade capture reports, you get two of them to say buy side confirm, sell side confirm. Dual sided, you take that picture and put it on a mirror basically, but here it gets more complicated where a trader submits from firm A, submits the trade submission through his post-trade interface user to the system. This will get sent to the comp ID of the firm, and maybe this illustrates it a bit better why we have these comp IDs and what trader groups and so forth do. It gets sent directly to the comp ID of the firm that you're interacting with that you've specified in your trade report. That firm will receive it and in essence accept it, decline it, give a response after it's been obviously accepted by the system, and then that gets, the system will say to the initiating party either you've traded or you've been declined or so forth. Now there's a whole bunch of other steps in here that are, it's a huge document, it's very technical, but anything can happen between. You can send in the trade request and can get rejected by the system. You've missed a field. You can get, you can remove it before it's gone. The counterparty has responded. So all of those steps of pulling a trade report and so forth, they exist currently. They'll exist in the future. It's just how the systems that you use as well interpret those events to tell you that this request that someone has sent to you earlier has actually been removed or revoked to make it clear why it's no longer there and you can't accept it. Okay. Matthew, anything on the webinar? Or are we good? Okay, then just the remaining milestones. This is the sort of last section before we go back to the beginning and say what haven't we covered and what were your expectations on getting out of the session. So future dates for the ITaC activities in a nutshell are this weekend we've got our mandatory market dress rehearsal. So in essence we have every single member connecting this weekend, trading this weekend, order books are filled, interacting, doing deal management, clearing at the end of the day, so everything. We're having our first full client-facing ITaC simulated production trading day this weekend. Okay, 25th is the second dress rehearsal. We do obviously encourage as many traders or so to come and participate in these as possible, and actually, well, mandatory market-facing dress rehearsals, so the word is there. During that session, we just want to make sure that doing our mandatory market dress rehearsals, you behave in a normal sort of fashion. So we had the briefings, we always have these briefings, and you just test, it's really for you to test that your front end works, what you normally do on a normal day happens, you can enter orders, the weird trades that you maybe do on a reported basis with a counterparty that you're always aware of go through, they happen, and you know, you can actually sit back and go, yes, you're comfortable for go live. We've got those two sessions. Quick question, sorry, from webinar.
Will there only be one drop copy gateway for both equities and derivatives on go live, or will there be a separate drop copy gateway for each market?
Okay, so technical question, but in essence, we've got 3 drop copy instances available. We load balance clients across them for performance reasons, and a setup for, because we are going for equity market is under its own firm and exists on its own firm, and then we have the new derivative firm. Those will be separate for the moment, so you will not see, if you happen to be a member across markets, you will not see equity market and derivative markets combined. Okay, then moving on further to the dates. 1 Feb is obviously the final enablement cutoff date. So 1 Feb is the last, absolute last date where we can say, and we technically enable you, we've created all the trade IDs, we've the comp IDs, the firms and everything set up after we've done all the dress rehearsals. Obviously this December period is a bit of a blank. We don't want to keep guys here testing too much in December. 8th of February, we have final live connectivity. So it's technical, but this is where you prove as a firm that you've connected to the production environments and all of your systems are 100% correct. We have actually mandated everyone to be done last week already from a software provider and technical readiness for the dress rehearsals, as they are meant to mimic a production day anyway. But this is the real last day before go live, where in that week to follow, we'll really not take any more LCONs, no enablements, just to make sure the system is absolutely not touched for that week of go live in preparation. So just bear that in mind, please. And then 17 Feb is our magic date of go live. Contingency there on the 24th. Well, not the go live, but the mandatory, the last cut over weekend, if you want to call it, and then go live on the 19th of Feb. So these are your high level milestones in this journey that actually really start affecting you right now. 11 November this weekend, production day, testing it on the new system. Okay. And I think that's it from me. Thanks for all the questions that we've had during the session. It helps to explain or give answers as we go along. Anything further or that we have not covered that we can potentially add into these slides or have a follow-up session for you guys going forward?
I think Martin so a lot of what Martin's covered today is in the volume 0 document. It is a business functional document and it explains a lot of what he's gone through in detail. So we can send you that link, have a look at it, browse. It explains the market setup.
Yeah, correct. It's all in there.
I just want to ask if anybody is on the conference call, if they have any questions.
No questions? Nothing on webinar?
No, there's nothing outstanding on the
Okay.
webinar.
And in the room, everyone good?
We are only a trading member, so at the moment we use quite a bit of reports from our clearing member. Will those reports be available directly now or going forward, or will it still be disseminated by the clearing member?
So I can't speak on behalf of your clearing member, but in essence what we're hoping they will do is provide you with those same reports. They will just interface to our clearing systems where they get those reports from slightly differently, but they should still be able to provide those to you. So I think touch base with them, see what they say. If not,
we'll still, I think my question is, we still have to get it through via the clearing member. I think that's my question.
It depends what type of reports and what you're connecting, what you're getting from. So if those reports are from a clearing member based on trading activity or so forth, and the software that you're using now has reports like that for, I don't know, maybe volume traded for the day per trader ID or things like that, the software, you should ask them directly. Otherwise, clearing member, if they have specific clearing member embellished reports that your software provider might not be able to do.
Okay.
Yeah.
So RTC being a real-time clearing feed, you as a trading member can subscribe into that and receive your own data real-time as the trades are going into the clearing system. So you can actually do your own real-time risk management. It is not something that I think people are looking at right now, but it's definitely available. I mean, that's certainly the way, that's why we've designed it this way, so you have that capability. So you should chat to the guys who've written clearing or deal management software and see what they can give you in terms of functionality.
Obviously, we'll still be able to load derivative sub-accounts on the new trading front end.
Yeah.
And then also... Okay.
Yeah.
Cool, no problem. Sure.
Yes.
And then also, obviously, currently there's some BDI entries that's being processed overnight. Yeah.
Yes, they will also feed through.
Just on BDI, I have asked Chris to try and give me a summary. We're still going to process the deals, and I don't expect there to be a major change, but we'll publish a little one-page summary of what you'll see on BDI.
But thanks for the question. It does raise an interesting question, which you should ask your software providers. Simple questions like, can I still do these things? Because some of the activity, like loading client sub-accounts, are no longer just on Neutron, effectively in one front end. They get done on the clearing system logic there because it's a client account. But the front end that you get, hopefully, or in the perfect world, will be one front end where you do the same thing and they just move it to the right side, trading one side and clearing. But it's good questions to ask your software provider to see, can I do all of these things? Which we hopefully going to all test on Saturday coming out now, those kind of things. Question on webinar? Sorry.
No, we'll
ladies
go first.
Yep.
Just could you please elaborate on the dividend neutral contracts? Are they no longer going to be F contracts? Are the N's now going to replace the F's? Is that what's going to happen?
Yes, basically that's going to replace it. So we're not going to, that F contract, I think, that's going to fall away.
Okay.
Okay, Martin, questions on the webinar. Can do setup still have a cutoff time at 3 p.m. or still have a cutoff at 3 p.m.?
So as it stands, I think they do. Something we can confirm with our capital markets team just clearly, but the logic on by what time you have to submit those is going to stay the same regardless of system functionality.
Okay. And then another one, when is the final cutoff date for production trading conformance testing?
So that in essence has, I think, already been passed. So if you haven't conformed your software as yet, because we are heading into, but I'll let Sandra speak to that as well. I'm just putting up the slide. If we're heading into mandatory market-facing dress rehearsal, conformed software was a prerequisite for that. Getting into the dress rehearsals, because effectively this Saturday will look like production, and you need to be ready with conformed software. We won't allow you into that production environment. That's Sandra.
So Martin's right. All software providers have done their conformance. Obviously, if they pick up issues in the dress rehearsals, we will allow them to fix that. It's in our interest that they do. And even after the second dress rehearsal. So we will give them those cutoff dates. But everybody's met the criteria for now.
Okay, and last one, shall we go through the same testing scenarios as on UAT and CTS?
So I think that might be a reference to testing scenarios in our mandatory clearing or voluntary clearing member testing, which is a clearing members connect to our test environment are going to start scripted testing. They are detailed scenarios. They are obviously production scenarios that we are hoping that you can do when you go live, or you will be required to do when you go live. So yes, it won't hurt to do that. However, we are promoting that you run a live day. You do the same activities that you would do on any given day. You have your test packs that you know what types of orders and trades you do, what type of deal management, how you allocate trades, any other activities that you do currently. That's really our guidance to say, do whatever you do on a production day on Saturday.
Yeah, and just to iterate what Martin is saying, it's not a volume test. We're very happy if you capture 5 orders, 5 trades, and go verify on every screen, every report, every whatever you use, that the data is accurate. That's really the purpose of this weekend's test. We will give you an opportunity to do volume during the test, but the focus is more on integrity and accuracy of the data. As Martin says, test what you do on a normal day. We've tested it, but we behave like JSE structured testers. We don't behave like the traders, and we really need you to do what you normally do.
Okay.
I just want to just make a note on the trader IDs, please. So we have given your new trader IDs to your compliance officers. We've given them the list. Talk to your software providers and just make sure, because when you log on, you're going to log on to your terminal as Sandra B. I'm not going to log on as my 1, 2, 3, 4, 5 trader ID. What typically the software providers do, they slap that on an order before they send it to the system, as Martin explained earlier. Just make sure as a trader you know where to go look that up on your front end if you need to. Okay. So you might not see your new trader ID, but they are there and they do exist. And just make sure you're happy with them. Okay.
Thanks, Sandra. So if there's I think we've done with all the questions. If we're going to stay around if you would like to ask us. Any questions can come through to customer support or the ITaC site as well. We'll take those and happy to engage. Thank you very much for coming, and hopefully see all of you on Saturday. Thank you.